Assalamu alaikum wa rahmatullahi wa barakatuh. And the continuation of our e-learning program, and this is part of revision for SS3, that is the class that is preparing for the final exam. And we need to revise the part of this company account. And under the company account, remember we have the authorized share capital and we have issued share capital. And under the authorized share capital, we have a preferred share capital and we have ordinary shares. And whereby we have the ordinary share does not have fixed percentage of dividend, while the preferred share have a fixed percentage of dividend. And that is whenever the question is given to you, the percentage will be attached to the preferred share value, while the percentage will not be attached to the value of the ordinary shares. That is, the directors will recommend the percentage for the ordinary shares, and that's be under the additional information. And the ordinary, when you are giving the question, and you first of all make sure you go through the question and make sure you stress much on the additional information. Like this question now, you have the UK Limited manufacturer sugar is authorized share capital 800,000, and the 800,000 now divided as follow. You have a 600,000 ordinary shares of 1 naira each. That's 600,000 multiplied by 1 naira will give us 600,000 again. And for the preference share, you have 400,000, 3% preference share of 50 kobo each. That's 50 kobo multiplied by 400,000 will give us a 200,000. And under the issued, and you get your issue capital under the major body of the question. Remember, the authorized value will be, authorized share capital will be, you will get the value under the introduction of the, that is introduction aspect of the question. Why the issue share capital, you get the value from the major body of the question, and try to know the difference between the two and don't mix them together. And the issue share capital, and you have ordinary share capital 1 naira, while the 3% preference share of 50 kobo each. They already multiplied the value, that's 50 kobo, with the number of units of shares before they arrive on 100,000. And already multiply 1 naira with the number of issued shares with 1 naira before they arrive at the 500,000. So you don't need to do any calculation on that one. You have a general reserve goodwill 5% debenture. You have a stock at 31st, that's a closing stock. Net profit for the year, you have a land and building fixture, motor vehicle, you have a provision for depreciation, and you have a fixture and fitting, and you have a provision for depreciation, you have a fixture and fitting, while you have the provision for motor vehicle, that's a provision for depreciation of motor vehicle. After that one, you have a creditor, debtor, cash at bank, and say you are required. Before you have you are required, you are giving additional information. Provision is to be made for the preferred share dividend. The director recommend ordinary share dividend of 4%. While remember I said earlier that the ordinary share capital does not have a fixed rate of a dividend, while the preferred share will have a fixed rate of dividend. That is, the percentage of their dividend will be attached to the value of the preferred share given to you, while the value of the ordinary share, you get the rate of percentage of their dividend under additional information. And after, you are given the goodwill is to be written off over 4 years. That is, the value of the goodwill under the major body of the question will be divided by 4. That's 4 years. That is, whatever be the answer, like this one, you have a 20,000 divided by 4 will give us 5,000. That is, the 5,000 will be written off the first year, 5,000 second year, 5,000 third year, and 5,000 fourth year, when the value of the goodwill will now be equals to 0 at the end of the 5th year. And in case, because of this question, in case you are giving more additional information, like general reserve, that is transfer to general reserve, and you have some other item. All the item you have here, like general reserve, you have like general reserve, and you have a goodwill written off. Instead of giving you 4 years, the value of the goodwill written off will be given. That is, the actual figure will be given instead of a analysis like this. And whatever be given, transfer them to the profit and loss appropriation account. Here you are asked to prepare profit and loss appropriation account. Remember, you prepare the till account. Here you have the debit and you have a credit side. On credit side, check the major body of the question. It's possible to have a two net profit. You have a net profit of the year, or you have and the second one, profit and loss. The profit and loss will be the first entry on the credit side of the profit and loss appropriation account as balance brought down. And the second one that will be transferred to the credit side of the profit and loss appropriation is net profit of the year. Net profit for the year, which is 80,000. That is, if you are giving two, the first one is either profit and loss figure, the second one will be net profit for the year. If the two figure is given, one will serve as a balance brought down and the other one will serve as a net profit brought forward or brought down. Here, based on the nature of this question, you are giving only one. That's net profit for the year, and you just write it, net profit for the year brought down or brought forward, 80,000 naira. On the debit side of the profit and loss appropriation account, you have all the written off should be transferred to the debit side of the profit and loss appropriation account. Like what? You have a goodwill written off 5,000 naira. Remember how we derived the value of 5,000 naira? That is 20,000 divided by 4, because based on the information given, goodwill is to be written off over 4 years. That's 20,000 divided by 4 will give us a 5,000 naira. And if you are giving the general reserve, that is transferred to general reserve, here remember it's possible to have the two values of the general reserve. You have the one general reserve under the major body of the question, and you have another general reserve under additional information that will be attached with one clause. The clause is transfer to general reserve. Any transfer to general reserve will first of all appear under profit and loss appropriation account. That is, on the debit side, you have a transfer to general reserve, you transfer the figure there. The additional information you have, provision is made for preference share dividend. The director recommend ordinary share dividend. Now 3% to get the dividend for preference share, 3% of, you have a 3% of 100,000 will give us a 3,000 naira, and that's dividend will be, and preference share you have 3,000 naira. And here you have a 4% is given to calculate the dividend for ordinary shares. You have the 4% of the value of the issued share. And the value of the issued share, here you have the value of issued share, you have 500,000, and 4% of 500,000 and will give us a 20,000. And after that one, any other information, no. And you have the debit side minus credit side, and you have the value, and the difference will give us a balance carried down. And the balance carried down you have there is 52,000 naira, and you have the balance. That's 80,000 naira on both sides. And the next account you have to prepare, the balance sheet as at 31st December 1989. And before you write the heading of the account, you have to prepare the name of the owner of the account must first of all be written. That's you have a K1 Limited or K1 Limited Manufacturer of Sugar. You write the name before you write the balance sheet. As you ask to prepare profit and loss account, you first of all write the name of the owner of the company before you write the profit and loss account. And after that one, don't forget to indicate symbol of money. It may be naira or pounds or whatever. The symbol of money given to you on that particular question must be written boldly. And if you are giving the pounds symbol and you cannot change it to naira, because if you change it to naira, they will mark all your calculation equals to 0. Remember, take note, the symbol of money given to you must be indicated very well. And to prepare the balance sheet as at 31st December 1989, the first thing, remember, we have a liability side and we have the asset side. Let's first of all consider the liability side. The first thing you have to consider, which is formality, is very, very important. You first of all write authorized share capital. Authorized share capital, remember I told you, you get the information on the aspect of the introduction of the question. You have the authorized share capital, that's you have a 600,000 ordinary shares at 1 naira each. You write it boldly like that. 600,000 multiplied by 1 naira will give us 600,000. You have a 400,000 3% preference share at the rate of 50 kobo each. 50 kobo multiplied by 400,000 will give us a 200,000 naira. You close that aspect, that is 200,000 plus 600,000 will give us 800,000 naira, and you rule and you close it with the double line. And you move on the same side, you move to the issued share capital. Issued share capital, you have ordinary shares, and that one is already analyzed. You don't need to do any calculation on it. You have a issued share, value is given 500,000. Preference share 100,000. You don't need to close the aspect. If you like, you can add 500,000 plus 100,000 and you have a 600,000, and you continue with the remaining entries, and you don't need to rule or close your 500,000 plus 100,000, that's 600,000. Immediately you have a subbalance 600,000. You continue with the remaining aspect of the question. And the next one, after issue share capital, you have a capital revenue or the capital reserve. The capital reserve, the example of the capital reserve, if given, you go through the question. If you are giving the share premium, if you are giving the share premium and you go through the question very well, if share premium is not given, therefore you don't need to indicate the capital reserve. You move down, you just jump that aspect, you move down to the revenue reserve. The revenue reserve, remember, you have to prepare profit and loss appropriation account. Here under the revenue reserve, you have a profit and loss. That is, the profit and loss means your balance carried down under the profit and loss appropriation account, which is 52,000 naira, must be transferred to under the revenue reserve. You have a profit and loss, you have 52,000 naira. And under the major body of the question, you have a general reserve. Here, if you are giving the general reserve under additional information and you have another transfer to general reserve, you need to consider the first value of the general reserve under the major body of the question, and the second one given to you under additional information. You add the two together and you transfer it. Don't do the analysis on your calculator. You need to do it physically on your paper. That is, write general reserve, add transfer to general reserve, subtotal, you transfer it to under where you have a 600,000 or 500,000 and 100,000 naira of a share. And the next one, you move down to the long-term liability. Long-term liability, you have the long-term liability, you have a 500, you have a 5% debentures. When you have a 5% debentures, and what's the figure? And the 5% debenture, you have the figure. When you have the figure, you transfer. Under additional information, You are not giving, the information is not given concerning the debenture interest. And if the information is given concerning the debenture interest, that is debenture interest accrued or owing, and you calculate, that's 5% debenture interest. If the actual figure is not given, you calculate it and you add it to the original figure of debenture interest, and you add it to the original figure of debenture interest. Current liabilities, you have the creditors. Under the current liability, you have a creditors. Bank overdraft is not given, therefore only creditor is given. Other owing or outstanding expenses, if given, you transfer them to this aspect. After that one, the last one, you have a proposed dividend. Proposed dividend, the dividend you have under your profit and loss appropriation account. Ordinary share 20,000, preference share you have a 3,000. If you add all the figure together, you have a 735,000. And before you write it as your own balance, you write it somewhere and you prepare the asset side, whether your account, whether the both side of the liability and asset will be equal. Because if the both side is not equal, you don't need to maybe rows and write the total. You write the total somewhere else and prepare the asset side. The first one you need to consider, remember we have intangible. If you want to do the analysis perfectly, you have intangible asset. The intangible asset, the first item is supposed to be goodwill. You write the goodwill. If you have a goodwill written off, you write the real value of the goodwill and you less goodwill written off. So figure, you transfer it to the last naira column. But if you want to mix them together like this one, you have a fixed asset, motor vehicle. Motor vehicle, you have 80,000 less depreciation given to you under the major body of the question, 16,000. If you minus 16,000, you have 64,000. But take note of one thing: if the provision for depreciation is given and you are giving another percentage to derive the depreciation figure under additional information, and you take that percentage to calculate the depreciation, here remember you are giving one as a provision for depreciation. Now this time around we have a two value of depreciation. The one provision for depreciation that is given to you under the major body of the question, and another one you have it, that's the self-calculated provision of the depreciation based on the percentage given to you. You had the two figure together and we call it a accumulated depreciation. You minus it from the value of the motor vehicle. But based on the nature of this question, you have only provision for depreciation, which is 16,000 naira. We minus it from 18,000. Subtotal will be 64,000. Fixture and fitting, you have a 25%. You have a 25,000 naira less depreciation. Provision for depreciation 2,500. So figure or subtotal will give us 22,500 naira. Land and building, no depreciation is given. You have a land and building 517,000 naira. Goodwill 20,000 less goodwill written off 5,000 will give us 15,000 naira. Current asset, you have a current asset stock, that's your closing stock. You have a debtors, you have a bank, and you have a cash. You add them together and you have a 735,000. Now if your asset total is the same or equal with your liability side, and you now sure that your account is totally balanced, and you can now write it out boldly as your debit asset side, you have 735. Liability side, you have a 735. You roll and you close it with the double line. If you roll and you does not close your home with the double line, they will penalize you. That is, your mark will be deducted. That's why you make sure you follow all these minor technical aspect of the calculation. Now the final one, immediately after the current asset, we have another asset. We call it a preliminary asset. The preliminary, that's we call it preliminary expenses. The preliminary expenses you have is an example of a fictitious asset. Fictitious asset is the last asset immediately after the current asset, if given. If the preliminary expenses is given and you need to transfer it to this aspect of your asset side, immediately after you write all the necessary items under the current asset, you have a fictitious asset, and the example of fictitious assets is a preliminary expenses, and you write it. And if you just maybe you have a omission method, when you are preparing the question, when the question is given, you are preparing the account. Here the fictitious assets is given, that is the preliminary expenses is given, and you do not transfer it to this account, you realize your account may not be balanced. That's why you don't need to rush. When you do write all the necessary items under the asset side and the liability side, your two figures or two balance does not equal, you need to go down through the question again, and you see one or two items that are already omitted, you quickly include them. And here does not mean that when you are writing the current asset that the debtors must come before the stock, or the bank must come as the last item, or under the fixed asset that motor vehicle must come before fixture and fitting, or the land must come before the motor vehicle. No, you quickly do the adjustment. That's why when you are preparing the account, immediately you enter the fixed asset finish. If you want to maybe give room for any adjustment or correction, you leave two lines before you move down to the current asset. After the current asset, if you are giving the fictitious asset, you leave one line to give room for the correction, and you write the fictitious asset. The same thing your liability side, which is long term and the current liability. In case of any omission in a method during the exam, you quickly do the adjustment. By the time you balance or you correct your workings, your account will be balanced. If your account does not balance, you find out the difference between the two figures, and you quickly go through the question again. It's possible to get the accurate figure that already omitted from the major body of the question. Or if your own does not balance, again, the difference between the asset and liability side, you quickly divide them by 2. When you divide the figure by 2, it's possible to get the accurate figure from your question. That is, when you are preparing the profit and loss appropriation, the figures are supposed to be on the credit side already transferred to the debit side, and you quickly do the adjustment. So try to take note of all this, a minor something, and I wish you the best of luck. Try as much as possible, lay hand on the many questions, practice as you are practice different questions. No knowledge is lost, and you realize that you be gradually you be improved. And I wish you everybody to have a distinction in the forthcoming exam. Subhana rabbika rabbil izzati amma yasifun. Assalamu alaikum.